Welcome everyone. We'll start. Please work on insurance while you work on your lunch. I'm K.S. Park. I'm a law professor, but also wear the hat of civil society as the founder, one of the founders of OpenNet Korea, a digital rights organization. And I'll be very frank with you. I know nothing about cyber risk insurance. I agreed to do the moderation only because I'm a loyal follower of CyFy and ORF for the past few years. I already majored in law, and I have not gone deep into a subject which I believe is more hard to penetrate and more boring than law, insurance. Sorry, colleagues. My tangential exposure to insurance arises out of my work in digital rights. For years. Much of what happens in cyberspace, it comes through the private arrangement among private parties, including telcos, platforms, users, and much of governance can come out of a voluntary arrangement, a voluntary assumption of risk among the parties. So much of the governance must rely on liability system. And when you study data protection law, one difficult issue is what happens, how do you measure the liability for data breach when you don't know whether data has been actually used by bad actors or not. Let's say there is a Korea suffered back in 2014. Korea suffered data breach of 100 million data sets in a country of only 50 million people. We were out of legal theories on how to assess the liabilities for the 50 million people who have to live in fear of data being misused or data being abused against their assets and their safety. So I think that law will have a profound effect on how insurance is structured and what it can cover and not cover. There it is. That's all I know about insurance. So from this point on, I let the panelists introduce themselves and then give 6 minutes opening statements, informing us and alerting us to the issues in this area. So I'll start with you, Caitriona.
Thank you. Good afternoon, everybody. My name is Caitriona Heinl. I'm currently working with EXEDEC, and what I'm speaking about this afternoon rather, is I'm hoping to present the findings of a number of reports that we put together in a project that I was involved in Singapore, which was run by the NTU Singapore Cyber Risk Management Project. Now, the reason I take up your point about this being a potentially boring area, the reason I think we should all find this particularly interesting as a field is the potential for cyber insurance to enhance cyber resilience. So that was one of the main reasons why our project tried to focus on building a working group of stakeholders from government and across industry to inform the public discourse. And if you're interested, I can show you some of our reports later on today, and to figure out this nexus between insurance and resilience. So I'm going to run through these points very quickly. I was told by the organisers I have around 10 minutes, so if you bear with me for that amount of time, I hope that's okay. So ultimately what we're seeing is a gap, not just in Asia, but also in Europe, where there is a search for optimal investment in information security, risk management, and cyber insurance. But what we're seeing are a number of limitations currently, including whether insurance can in fact lead to due diligence and introducing baseline cybersecurity measures, or whether it could end up leading to risk transfer strategies and a situation where entities ignore IT security. Now, I have eight main groups of groups of findings and observations from our group. It was a working group, so there was not consensus across the group, but from a number of members I have observations that I want to bring to you today that you might find interesting here in India. First, there is a hugely wide spectrum of cyber risk, and this is challenging for those in the field, and many components. So what this means is that it's hard to seek cyber risk cover. And a key problem identified by some of the members is the extensiveness of available products. Now, you also have a situation where traditional risks, so think house insurance, for example, is static, whereas cyber risk is more dynamic in nature. And this is exacerbated by the fact that past risks have not necessarily evolved as fast or in as complicated a manner as cyber. Added to all of this, we have a situation where the scale of potential losses are in a hugely different league to traditional risks. Now, the second main area that we focused upon is the actual importance of insurance itself in this field. Why is this significant? First, it's an integral part of cyber risk management, so entities are going to figure out what they accept, how they mitigate, and whether to transfer risk. But what we find is that there just was not enough conversation about the risk transfer part, at least a year ago. The one key question that was explored is whether it's possible to have insurance as an alternative to regulation, if it's used as a tool to enhance cybersecurity and to incentivize entities. So, for instance, this is where you could ask, is it possible that this might help smaller entities and those weaker links in the supply chain? And in doing so, trying to ensure that it's cost effective. Now, the big but here, the big question, and I don't think it's particularly certain at this point in time, is whether this is and can be an effective tool to enhance resilience. So what you don't want is a situation, so our government stakeholders, for instance, where concerned that you don't want a situation where risk transfer means that you're just moving risk about the place without resolving the problem at all. So in that situation, what you ideally want is you want to make sure that insurance is used to deal with the residual risk. So you're dealing with the unforeseeable aspects of cyber and those components that are dynamic and unpredictable, and ensuring at the same time that entities are putting the right measures in place as preventative measures from the get-go. The third bulk of questions we explored are how do you establish the right proportion between regulatory and market drivers for an effective insurance ecosystem? Now, the argument here is that cyber insurance products at the moment are just not meeting customer needs. And what is not clear is whether the market itself can mature without regulatory intervention. Now, this part I think government stakeholders found particularly surprising, what I'm going to say next, and the fact that some of our members argued that regulation is or should or may be needed going forward, where cybersecurity standards are mandatory rather than waiting for the insurance industry to develop. And in Singapore at least, and I'm sure in many other countries, regulatory structures are just not robust enough right now. Fourth big debate concerns issues related to data. Now, this debate could go on all day, but I'm just going to point out some key issues for you. One of the conversations relate to insufficient amounts of data and how this could impact on how we provide reasonable pricing. Now, the counter to that is some would say we actually have enough data and you can provide quotations based on this. That said, it's still easier to do so if you have more information. So I would say there's a bit of back and forth among stakeholders in that regard. Where it gets interesting is breach notifications. So the one key is that with no mandatory reporting, you have a lack of data. But when you look at case studies, or you look at, say, for instance, the United States, where mandatory reporting was introduced, Some would argue that this did not, in fact, lead to a situation where insurers could develop good products based on this data. And it's unclear right now where in the world their data is being released in a way that's useful. A point that I find particularly interesting is that if breaches are not being reported, consumers are not concerned and they're not buying cyber insurance. So even in 2018, where people, they're opening the newspapers, they hear about cyber incidents every day of the week, they still don't have a tangible sense of the threat. So this means that customers really need to start considering how cyber insurance fits into their overall cyber risk management. And that's a nice segue into the role of education. And I think this was laid out in the description for today's panel on what we can do going forward. So we need to educate and increase awareness on why insurance is in fact needed and whether it's needed. We need to deal with the fact that there is a lack of tangible sense of threat, even though you see so many reports in the media. Another point I find particularly interesting, given that we all work in the field of cybersecurity, is that the term cybersecurity is considered as too vague for consumers. So they don't actually really understand what it means when it comes to the crunch. So we need to develop terminology that is much more specific in nature in order to hit home. The last point on this is that buyers are finding cyber insurance is just far too complicated, and it needs to be developed in a manner that's much more accessible. So the last point on awareness issues is that in doing so, it's important, well, our group at least felt it was important to ensure that this is done in a manner that that cyber hygiene is not replaced, so that you have a combination of both cyber hygiene and insurance. And this is particularly important for the SME sector. And when it comes to the SME sector, our group spent a lot of time, funnily enough, on the SME sector. They felt it was very important as an area, and that future research needs to start considering whether you need industry-specific insurance and trying to take into account the differences across sectors and their different maturity levels of cybersecurity. One consideration that was put forward is whether combining insurance with cybersecurity products for SMEs is a helpful way going forward. The reason being that they may have lower funds and lower expertise in these areas. And as most of you are probably aware, the SME sector is very important when it comes to national security, given its role in the supply chain and the impact it might have on some of the larger entities and other major actors in this field. Seventh issue, product liability issues just aren't getting enough attention. And the very last core group of concerns relates to harmonisation of legislation and guidance. Naturally, multinationals would prefer if there was more movement towards harmonisation of legislation and guidance. Realistically, we don't see this happening anytime soon across Asia countries, at least in the near future. And you also have a situation where, of course, some regulatory frameworks in countries may be seen as providing a competitive advantage. That said, this can still occur organically. So, for instance, I'm speaking about a working group in Singapore, but if a country in Asia were to start introducing good practices, it could occur that then this snowballs and starts developing good practices outwards and more organically. So that brings me, I think, to the end of my 8 points, and I hope that's okay for the chair.
Yes.
Yeah.
Thank you. I am Sundeep Oberoi, and I'm with Tata Consultancy Services. So let me make this boring subject of insurance a little more interesting for you. Insurance products are unique in two ways. A buyer buys insurance hoping that he'll never use it. It's the only product you buy hoping you'll never use. Usually suppliers have a very good relationship with their customers. They want customers to use their products and give them feedback. And this is the only product if you use, you invite allegations of fraud from the seller. So it has its own unique, interesting points. About my role is service delivery to TCS customers globally. And I'm responsible for delivery of cybersecurity services. So I have this role of service provider. Because all the tech infrastructure that you see, somebody runs it. People run it. Technologies do some things, but a lot of it is process, and the process depends on people. Depends on people doing things right. So 20 years ago, if we leaked a lot of data, and irate users came to you, you just patted them on the back and said, look, these things happen. Today, there's no talking. You get a legal notice right away. As fast as you can respond to a breach, you get a legal notice. So, people are not, they're not comfortable with assessing the consequences of a breach. Today in our contracts, in our service delivery contracts, we have liability for service failures. So if I fail to perform my obligations, I have a financial liability and a penalty. And in the traditional days, these penalties never exceeded the total values of the contract. But we are seeing now, in recent years, that we are having to sign contracts where the penalties for data breach are much higher than the contract value. And in some cases, in some instances of liability, the liability is uncapped, which means that if a competent regulator or a government imposes a penalty and your contract allows your customer to pass that on to you, you are potentially running with an uncapped liability. And that's not comfortable. We do our businesses through ecosystems of partners. Our relationship with the partners are relationships of contract, but our relationships with the regulator and governments are those of regulation and law. So the liability, strictly speaking, rests with some entities, and some part of your work you have outsourced to somebody else on contract. These risks are getting to the point where they're not predictable. There is a recent Ponemon Institute study that puts the minimum average cost of a data breach at a couple of millions of dollars. So, if you have a breach, if you have liability, the first thing that drooling lawyers do is search for solvent defendants. There's no point finding somebody that's insolvent. So many corporations are now running cyber-related risks which they are unable to cap easily and must resort to some form of insurance. The difficulty we have there is, how do I assess risk? Regulations are still settling down. What is adequate security? If you look at the history of software, before software products product manufacturers were required to give you strict warranties and guarantees of merchantability. If you look at the end user licenses of any software, no software manufacturer gives you any guarantees or any warranties, including fitness for purpose or merchantability. So you're building ecosystems, complex ecosystems with technology that comes with no warranty on functionality. And in this maze, you must estimate liability, and an underwriter must be willing to pick it up. So the need exists, it exists painfully. Every day in my day job, I feel the need. We're not able to quantify the risk, we're not able to make it visible. There are direct risks. The direct risks come from contract, they come from cost of restoration. These are the direct risks. There are indirect risks. Stock markets always penalize data breaches unfailingly. There is loss of future revenue, there is loss of reputation, and there is liability. In almost all our contracts, we have to indemnify customers. So we are very quickly into third-party risk. So it's not now only about direct risk or damages to me directly. As a consequence of cybersecurity failures, there are third-party risks. It's a complex ecosystem, and a small spark can cause a big explosion. In the physical world, the laws of physics prevent propagation. No matter how loud I shout, my voice will only carry a few meters. In cyberspace, policy is code. A whisper can be heard all over the world. So things propagate much faster, and the risk is quickly becoming uncontrollable. The same Ponemon Institute study says that if you look at small businesses, 61% have had a data breach in the last year. That's up 55% from previous year. And it also has the other startling fact that 60% of these businesses never recover. They never recover from that breach. They just go out of business. So it's the smaller elements that need this insurance the most. And they're probably in the worst position to be able to demonstrate a cybersecurity posture where they can get insurance at a reasonable price. And so, since I've almost talked all of you into silence, let me pass to the next analyst.
Daniel?
Great, thank you for having me here today. I'm Danielle Perez with Palo Alto Networks. We're a major cybersecurity company headquartered in California, actually in Santa Clara, not Palo Alto. But we do business in 150 countries around the world, including here in India, and our team is growing, and we're very excited about that. I've come to India many times over the last 7 or 8 years for this job and a prior job, and I'm always impressed with the focus and energy here on cybersecurity. The country continues to do a lot. So again, I appreciate being here. So I'll make 3 points now, and actually some of them build upon particularly Caitriona's remarks. I'll make these 3 points and then look forward to the discussion. And I'll talk about the lack of data on which to actually base policies, the trend toward security automation as a potential answer, and also the bigger question of what are we actually trying to use insurance for. So one point, and I think many people are aware of this, is there are a lot of challenges to adoption of cybersecurity insurance, and one of the large factors is the lack of actuary information to base policies on. That's true in the US, where I think people think the US is one of the more mature markets for cybersecurity insurance, but we still have that as a huge challenge, and I think it's true across the world as well. So, we've talked about cybersecurity insurance for a few decades, and many companies are offering policies, but we still don't have a lot of quantifiable, standardized, or historical actuarial data. And we can compare this to other types of insurance. Caitriona mentioned house insurance. I'll mention car insurance. A car insurance policy is based on the car's security features, the demographics of the driver, where the car will be driven, how often, the driving record of the driver. Based on this, the company can come up with statistical data to price the insurance, and so that information is knowable. In cybersecurity, that is really not the case, as Caitriona mentioned, some of these other industries, the risks are static. In the cybersecurity industry, they're very dynamic. The threats and the vulnerabilities are constantly changing, and they're being driven from kind of two directions, two things. First is the companies themselves, or the consumption side. They're continuing to invest in different technologies and operational innovations, such as IoT, and these can enlarge the cyber attack surface. They introduce new vulnerabilities that need to be assessed and insured, so that's always changing. At the same time, the cyber adversaries are also constantly changing their attacks and their attack methods and finding new ways to attack you. From our perspective as Palo Alto Networks, we generate 1.5 million new preventive measures every week that we push out to our worldwide customer base, and that shows you how many different types of new attacks come on board every week. So this is always changing. So if most cybersecurity policies aren't based on scientific data, what are they based on now? And what we're observing is they're based on two things. One is an outside-in view of a company. So an insurer will look at a company and maybe work with cyber insurance intelligence companies, and they try to provide a perspective on that client, its supply chain, its past breaches, trying to develop some kind of security scorecard on that company. The other way that insurance brokers look at a company is they basically ask them to fill out a survey, or a controls validation process. For example, are they using two-factor authentication? It's basically a self-assessment, and both approaches really don't tell the whole story, and this is what needs to change. We need more of an inside-out visibility that's based on real data. This requires companies to have a complete view of their network and where their data is located, whether that data is in their network, whether it's on their endpoints, whether it's in the cloud. And again, that becomes more challenging as you introduce new technologies. They also need to know what's going on in that network. What devices are attached to your network? Who is using those devices? There's a huge proliferation now of what we call shadow IT, meaning it's IT that's being used and the IT department doesn't know about it. You have employees setting up Box or Dropbox accounts. They might attach some personal devices to the network. So it is challenging to come up with to be able to insure in this space. We do think, though, that automation can help to capture the data on security processes. So, automation is changing a lot of this. And again, comparing this to car insurance, a lot of new technologies in car automation, such as sensors to indicate if it's safe to back up or to change lanes, or anti-lock brakes, they're meant to make cars safer. And there's a growing use of automation in cybersecurity as well, to help companies understand what their security posture is, to have concrete information about what the threats are to their networks, what controls they have in place, and to map their controls against best practices. Some of that is being automated, so that will allow for a bigger capture of data. The third point I want to make, though, is, and I think this reflects the comments of both Sundeep and Caitriona, is, taking a step back, what are companies actually using insurance for? Caitriona mentioned insurance should not replace cyber hygiene, which is true. If you do get compromised, you might have financial losses, which may or may not be covered, but what about your reputation? If a company has a breach and loses the data on millions of customers, the insurance policy might pay for a incident response team to do a forensic analysis, determine what happened. The insurance might pay for postage stamps to mail out notices to all of the account holders, but there's also that cost of the damaged reputation, of that loss of trust. And I think you mentioned that many small companies end up going out of business when a breach happens. So I think the main, insurance is a tool, but it's not the end state, and it's really essential for companies to invest in the people, the processes, the technologies, to visibility to their networks, to secure the networks, and to prevent attacks in the first place. So I'll end there and look forward to the discussion. Thanks.
Next, welcome. Thanks. I want to start off by saying that you guys are great for a post-lunch session. So clearly my fellow panelists have made it a mundane topic more interesting. So thanks for that. By means of a background, I come from a slightly different background to the panelists here. I'm an ex-investment banker, and I now spend time with venture capitalists, startups, and not a cybersecurity insurance expert, but I touch upon this topic every day with the companies I work with. I'm based in Singapore. I cover the Southeast Asia region and India. I advise Axiata Digital, which is one of the largest telecom groups in Asia, and our footprint covers emerging and emerged markets, developed markets rather. So Singapore, Malaysia, Thailand, Vietnam, Pakistan, Bangladesh, Sri Lanka, Cambodia. So we see a range of issues in cybersecurity. And from a telco perspective in particular, given that we have 300 million subscribers across the region, we are significantly exposed. I'll touch upon 3 points as well. The first one is the definition of risk, which some of my fellow panelists also touched upon. You have to define what that potential risk is to be effectively insured. In order to be effectively insured, you have to be ready to open the books for folks to come in and do a diligence on how prepared you are or unprepared you are. And a lot of companies are not ready for that. They are in denial, and they may skim on the surface of what they want insured because it has a direct impact on premiums. So there's a big resistance to opening up. And you can see that in the US right now, as Daniel mentioned, there's probably a third to maximum half of the corporations which take cybersecurity insurance, even though the scale of that breach is rapidly exploding. I think the second point is, what do you insure? And that leads also into how do you define risk, but also the 4 key elements of what you insure essentially is investigation and forensics. It is then business loss, business interruption, which reflects upon reputation, future business prospects. Very hard to quantify, and also very hard to insure. The third aspect is privacy and notification. You've got to go out and inform everyone that you've been breached, which is not a pleasant experience. There are costs associated with that. And fourth, of course, is lawsuits and extortion, where we talk about uncapped liabilities, indemnifications, etc. Now you also see that a lot of corporations, and I'll use the word denial again, try to brush it under the rug. So sometimes the breaches come out very late, and only when either there's a whistleblower or it just comes out in the open, and we've seen that with Facebook as well. So the cyber hygiene point is very valid. I think there are significant internal resistances as well, which we see, and a lot of it is maybe the board taking a stronger view than just the management. And the last point I want to make is around are the right companies being insured. I mean, we are seeing exploding number of companies coming up in the startup space. There are companies which are hitting, $1 billion, $10 billion market caps in 3 to 5 years, whereas it took the earlier generation of companies 20, 30 years to get there. But at this stage, these companies are all either not relevant in the bigger scheme of things, or they don't have the capital, and but their user base is phenomenal. So I'll give you an example of what we're seeing a lot in Southeast Asia right now and in India. It's banking the unbanked, financial inclusion, and working for the underserved and the unserved. What does that mean? That means these guys who have the ability to consume, and they are topping up their cell phones for $2, $4, $5 a month, are aspirational, are transacting, have the ability to service loans, but they're not credit scored. So there are companies which now approach, for example, telcos and say, look, we can score people off their prepaid top-up behavior. All you need to do, telco, is give us access to these guys. We will never know who they are. We just have anonymous numbers. Telcos being in the state they are, any extra revenue is good, so they'll say, okay, we'll open it up. So these guys go into the NOC of the telco. They are able to then plug into each of the users who will consent to the fact that they are ready to be opening up to this, let's call it a loan app. But these are all underserved or unserved folks, right? They're not very educated. So when they click, I agree to be approached for a loan, they are then clicking where they give complete access to a PhD team based in Vietnam or Estonia to troll through their entire data on their cell phone, right from their text messages to their emails. And that is a significant exposure for the telco. Now when that happens, who's exposed here? It's the entire customer base of the telcos, which is individuals, which is merchants, which is SMEs, because a lot of these loans are to SMEs and merchants. And we're seeing that in e-commerce companies as well. E-commerce companies are opening up to their small scale merchants and SMEs. But these guys don't have a voice. Either they'll never know that they've been breached, or if they have been breached, they don't have time in the day because they're busy paying the bills to even raise their voice. And a lot of the companies themselves are struggling for the next round of funding, or in denial, or highly concerned about reputation. So it gets swept under the rug. So I think the point about are the companies who need to be insured, are they taking this insurance, and are they getting insured or not is a big point as well. So I'll just stop here and hand over to Matt.
Thank you, Matt. Marianne, next.
Afternoon, everybody. My name is May Ann, and I'm from Singapore. I'm with the Asian Cloud Computing Association. And I want to congratulate all of you, because all of you have now won a family trip to go on a holiday with your family, and you have a child with you, a daughter. She's 15 years old. Okay, you're going on a trip. It's a holiday. It's to a nice beach island. Okay, and then the holiday, the person who gives the holiday says, well, you have to register on the website, for information and to register for the air ticket and everything. And you go to the air ticket page, and some of you have done this before. You go to the air ticket page, you fill in everything already, and you get to this site that says, do you want to buy insurance for your trip? For another, how much is it? What, $10? $20? Or, they'll ask you, do you want to buy insurance for your trip? So you're thinking, I think I'll buy insurance. And then you go to this next page. Who else is traveling with you? You've got your family and your daughter with you, and they ask you a couple of questions on, what stuff would you like to insure? And it tells you, okay, in case of loss of, what do people bring for holidays? In case of loss of your clothes, you get $20. I'm like, okay, well, that's not too bad for a $10 insurance. But for another additional $2, you can insure your digital camera. I'm like, actually, that's not too bad. I bought my digital camera. I'm not quite sure who still uses digital cameras, besides, cameramen, but, okay, you can do that. What about, how about your mobile phone? Okay, that looks like a good idea. You tick that, and then this huge long list of things comes down that says, if you want to insure your mobile phone, you have to make sure that you do not use this program or that program. You cannot be on Telegram, you can't be on Facebook, you can't use WhatsApp, and then you can get insured for maybe like another additional $1,000. You're like, hold on, would you actually want to do that? So you call your daughter up and you're like, okay, well, because I'm thinking about my parents. Okay? My mom will be like, yeah, no problem, I'm going to insure my mobile phone for whatever amount of money because I'm not on any of these platforms. You call your daughter up and you're like, okay, is it possible for you for us to get this insurance? Because I'm really afraid you're always on your phone, you might drop the phone somewhere. And your daughter goes, no, I'm sorry, but there's no way that I'm not using any of these programs, don't buy the insurance. And you go off and she loses the phone and you're thinking, actually, how much was that worth? How much was that protection of her phone worth? Then you go and you assess the damages from your daughter, and your daughter's like, oh my gosh, I have my homework there, I have my photos, I have my chats with my friend, and they're so long ago because they're really they're photos from when we were really children, and there's priceless, I didn't back them up, etc. And you're thinking, oh my gosh, how much are you willing to put a dollar value to all of that? Now change this scenario to a small and medium enterprise and change the daughter scenario to your customer. I think that one of the things that have been discussed at this particular panel, the things that have to do with the complete unknowability of what we are trying to insure in the first instance, and the mutable value of data. It's no longer something which small and medium enterprises, which I work with a lot in Singapore, no longer something which they can accept in terms of a risk assessment, because the risks are unknowable. Not only are they unknowable, but they're growing as well. And it is near impossible for small and medium enterprises to sign any sort of insurance contract or even begin to talk about insuring their businesses against any sort of cyber breach or cyber attack, because it's almost like signing a blank check. They don't know what they don't know, and they don't know, in the case of you and your daughter, you don't know what information she has stored in the phone. In the same way, a lot of times the small and medium enterprises can't really tell their customers or even their employees what they're doing and what kind of data they're hosting. Also, and this is where I'll stop, also note that a lot of innovative companies, and we've talked about this downstairs in the last panel, a lot of innovative companies are creating new models of information. For example, you actually have a data set which is collecting information of your customers, and suddenly one of your engineers thinks, hey, maybe in my free time I might want to reverse engineer and do a profile development of our customers. You don't know what they're doing, but that's innovation, right? And we don't want to stop innovation. But at the same time, there is a need to protect your businesses from going out of business in case something happens in a breach and it gets out. Not just the monetary value of the information that's lost, but the reputational value that has been spoken about. All of that is, at this point in time, astronomically high for small and medium enterprises. And there is currently, I don't see any way of grappling around this for small and medium enterprises. I mean, the big companies do have technology risk assessment that you talk with regulators, and that's something which I have here with me. The ACCA, we actually developed discussions around the financial industry and how we talk financial risk management with the regulators. But for small and medium enterprises, it's been a hard couple of years trying to manage both the innovation, privacy responses, and now the need for business insurance. Thank you.
Thank you. I want to be an advocate for the ordinary people that's in the audience. I think we've heard from someone selling insurance and also someone buying insurance. Actually, Sundeep, you said you provide cybersecurity services. So, do you usually buy insurance to guarantee your service, or how do you categorize yourself? I mean, in response to that, I'll shoot my question, so if you can be brief.
Tata Group owns an insurance company also.
Okay. Microphone, please.
So we are in the position of sometimes having to buy insurance
Okay.
because of third-party liability that we might incur.
Mm.
Because deficiency in our services might cause losses for which claims are made against us.
I see.
On the other hand, in our advisory role, cybersecurity advisory role, we might advise customers on how to go about purchasing insurance.
Okay. Okay. All right. Then here are two questions that any ordinary person or ordinary user of cyberspace may ask. One is I think all of you touched upon how difficult it is conceptually to underwrite a cyber risk policy because of lack of actual data to base upon. But apparently the insurance products are available. And I just read Rand Corporation report a few minutes before coming in here, and the average seems to be for $10,000 premium, I think it's monthly premium, for $10,000 premium, the policy limit will be $10 million. So that's like 1 to 1,000, right? And that seems to be a similar figure for my auto insurance at home. If I pay about 100,000 Korean won, I usually get back the policy limit of 100 million won. So apparently there seems to be some working numbers available for you to work on. So how do you, facing the impossibility of, facing the lack of data, facing such conceptual difficulty, how do you actually gauge the numbers? How do you actually determine the premiums? The second question is, it's a really reality check. How big is the actual liability when data breaches actually happen? Because many data protection laws, yes, will make the companies liable, but some other data protection laws don't have the statutory damage provisions. So the fact that there was a data breach of 10 million data sets doesn't mean that the company is liable even for a penny, unless some user later finds that his data was actually used to defraud him by the bad actors. Unless there is the concrete damage, many times companies are not liable at all. So how liable, how big is the possibility of huge liability for mass data breaches? So Marianne, who is usually on the buying side of insurance, is nodding her head. What are you actually protecting against buying insurance, right? So just look at Cambridge Analytica, right? Who was actually legally liable and by how much? Does anybody know how much Facebook has paid to its users? Maybe zero, right? Then what's the point of buying insurance, right? So those are kind of
let me tell you.
Yes.
Let me tell you about a breach that everybody knows about, the Sony Pictures second breach. So I ask a lot of people, what are your takeaways from the Sony Pictures breach? Part of it was they lost data. Lots of embarrassing emails on the internet. But their entire business was brought down and it took them months to recover. So it became a core continuity of business issue. Okay? So there's a lot of talk about a data breach and what a regulator might fine you, but there's not that much talk of what you would do if your data became unusable. And without naming names, you will not believe the number of large corporations that have paid ransom on ransomware attacks.
So you're talking about first party loss.
See, cyber hygiene as a theoretical concept seems to be appealing, but what is the reality? Any large IT plant has tens of thousands of servers. Okay? Many of them are not supported by their manufacturers or their software providers. Okay? They're running at patch levels of N-10.
Yeah, I'll just jump in quickly there. Just with respect to your point about it being hard to underwrite because of the lack of data. Now, we have 4 reports, and I was involved in this process as the honest broker, the academic. So if you are interested in some of the debates back and forth on this and how we looked at it in Singapore and how it might relate to your debates or discussions here in India, please do. But on that, our members actually felt, yes, it's hard, but it is possible to quantify. So I think we need to push back a little bit on that kind of dynamic in conversation that's out there. And just one more point that I'd like to bring up, if you don't mind, with respect to some of May-Ann's points on the SME sector. I think we're seeing a new model being developed in relation to the SME sector, which is really rather fascinating to observe. And what you're seeing are insurance companies that are now providing cybersecurity products. And that could be perhaps in a joint venture with traditional cybersecurity companies. And what they're providing is, say, preventative products or response products and digital forensics. And they're also trying to do this in a cost-effective way. So again, there are lots of questions out there and what does or does not work, but interesting to watch it as a new model being potentially developed.
Yeah, they want to do their marketing for them.
As I said.
But there definitely are models, and they're definitely fascinating.
Yeah, and as I said, I mean, we were in an academic capacity, like we were the honest brokers on this, so I mean, I have nothing to sell. But I do think there's value in looking at some of these processes and models that are being developed.
No, I have some friends who are working in small and medium enterprises, and the reason why I don't want to touch on that is because they keep telling me that, well, it's like people who are virus makers and they're trying to sell me antivirus software. They're not quite sure whether or not the cybersecurity companies selling cyber insurance actually makes sense, because sometimes there's a bit of a conflict of interest there. So that's why I didn't want to touch on it, because we're a little bit short on time. I didn't want to open the can of worms. So very happy to chat with you guys after this session. If I'm sure anybody's going to be happy to talk to you after the session about this as well.
I'll just add one thought on what are you liable for.
Right.
And I think what you're liable for is not it's not necessarily the damages you have to pay to your end users or as fines to the regulator. Those are undefined. But in your Facebook example, they've paid nothing to the end users, and it's breaches 50 million now, people accounts, and before that another 20 million. But Facebook has knocked off 20% of its market cap, right? So that's over $10 billion gone, right? It's hurt the shareholders, it's hurt the company. That's the cost of loss of reputation, users switching off their accounts, future business potential. So, and that's the complicated part to quantify. And which insurer is going to say, okay, I'm going to insure you for lack of reputation, future business costs, etc. And staff as well.
Yeah, so staff losses as well. We've got a few very high-profile employees leaving Facebook. I mean, I guess it plays into reputation, but given the discussion around the internet and AI and skills training, I think that's actually really relevant.
Mm-hmm. Well, thank you for the enlightening answers, and I do believe, yes, I do agree that in terms of first-party laws, including reputational laws, the conceptualizing the covered losses is very immediate and very it is tangible. But what Sundeep has emphasized was the ability of these losses to propagate through the internet to snowball. When you talk about that, you're talking about actually third-party loss, the payment you have to make on behalf of or to compensate the users. And on that issue, I think that it is you do have to fall back on how the liability laws are structured around data protection. And I thought that I hope that there will be more information on the data protection laws and how they interact with insurance availabilities. Okay, now we'll open it up to questions from the audience or comments. Yes? Do we have an extra microphone? If not, I'll give a mic.
I'll come there, no problem.
Oh, okay. There's a stand mic, yes.
Should be working already. Yeah. So, Sundeep, my question
Do you want to put the, yes, microphone?
Yeah. So, Sundeep, my name is Ajay. I'm the country manager of sales for Palo Alto Networks. My question to you is, because you see this market every day globally, what is the future of cloud security? And what do you think should be the role of the Amazons and the Azures and the Google Clouds of the world? Because what we see very closely, there's a lot to catch up, and there's some kind of shared responsibilities what they talk about when we talk about cloud security to the customers. I mean, that's a global behavior they have. We just wanted to listen to you. Thanks.
So I listened to one of the Gartner analysts recently. He's a very bright guy, can't remember the name. The point he was making is that after a while, you will always have on-prem, but after a while, the cloud will be the default and the on-prem will be the exception. So the reason for that is your tier 1 cloud providers can probably do a much better job of security than most other corporations. So either you're in the top 5,000 corporations of the world. If you're not, a tier 1 cloud provider probably does a better job of security than you can do. But there's still the issue of configuring that security infrastructure properly. You can still make those mistakes, but that's better than managing the entire infrastructure. But the issue of liability between the cloud service provider and the customer, that hasn't really been solved. So, as a matter of security posture, maybe you're more secure. Something bad happens, how will you apportion blame? I don't know. I haven't seen something like that yet.
So, I'll just make one statement. I forgot, just for the knowledge of the audience out here, because many of them may not be from the service.
Can you use the microphone?
Yeah.
Yes.
So
And also please speak, because there's a line going.
So everybody in this room for their consumption, I mean, many would be well versed with the ID, the subject and not, and security per se. You know what it takes for a hacker or a bad actor to get onto a cloud is just his name, first name, last name, and his card details. That's it. You want to get a bad actor was to log into Amazon, the AWS cloud, or I shouldn't say AWS, it should be any cloud. He just has to give his first name, last name, and the card details. He's into it. Which means today on that cloud, you have maybe thousands and millions of those bad actors available there. It's such easy access available. So that is how critical cloud is when it comes about security. I thought I'll cover this. Thanks.
Thank you. Next.
Thanks for nice, nice panel. My question to Mr. Gautam, just I want to understand, future banks which is coming right now, new payments bank, new kind of services they are providing, and what is the, they are also facing security threat. So please light on this issue.
No, you're absolutely right. And there's a whole thematic of digital banks. Right? One, by regulation, because you're not allowed to open too many physical branches in India or the RBI. And secondly, we don't want to go to branches anymore. So by necessity, all the data is in the cloud. Now some of them, and that's, I think from an India perspective, that's why the RBI is very, very selective on who gets the licenses for good reason. But that's just step one. How those banks are dealing with data, how they're protecting the data, is a big question mark. The second thing is, let's call it fintech companies, right? Fintech to me is an abused word, but there are a lot of companies in the fintech space which have access to consumer data for loans, payment profiles, etc. How are they securing it? And these are companies which are struggling for the next round of funding till they come out and become a PTM, right? And for them to go to a Tier 1 cloud provider is a big cost. For them to just struggle and just get to the next level when they can afford proper cybersecurity is probably the norm. So these are massive risks, and that's not just in India, we see that across Southeast Asia.
Any other question or comment? Yes.
Yeah, I often joke that the S in cloud computing stands for security.
Was there a question?
No.
Okay.
The S in, when you spell out cloud computing, the S in that stands for security.
Thank you. I think that's a cheer for all of us. Yes. Go ahead.
Several of the panelists talked about SMEs, and if we consider this risk to be so ubiquitous and so many of those small and medium companies to be unprepared to quantify or manage that risk, do you think the market will end up solving this, the insurance marketplace, or do you think we're going to need to go towards collectivized or regulated insurance solutions? Many national jurisdictions have collectivized health insurance. Many jurisdictions have gone to no fault for automobile insurance. And then to limit cascading effects, for example, the United States has its FDIC insurance for investments or deposits in banks. So do you think there's a regulated solution here, or do you think a pure market insurance solution will eventually figure this problem out?
I think it's a question anyone can jump in.
I don't mind you first, because I did slightly raise that point in my talk, and then if anybody else wants to jump in, that's cool. Our group found, really interestingly, our group found that, yes, they felt that there could be more of a regulatory role. I think we went in nearly assuming that the argument would be for market to take the lead, and that market drivers would deal with this situation better than regulation. And I think government was surprised to find that those in industry in the room were saying, actually, we would like regulation across the sector. So we're not just talking about the critical infrastructure sectors, we're talking across the board, including SMEs and so forth. So that was surprising, I think, for everyone. So I would say, based on some of our work, yes, there is a role for regulation in the first instance to then potentially support market drivers going forward. So that would be my take based on the work.
Daniel?
Yeah, I'll just add, I don't have an answer here, but it was very interesting. This question came up maybe 4 years ago in the United States. We had one of our first major, well not first, but a major cybersecurity executive order that came out of the White House when President Obama was still there. And an executive order is not a law. It's basically the president directing agencies to do what they're already statutorily allowed to do, but he's just giving them some direction. And it was an executive order on improving cybersecurity and critical infrastructure. And that was the executive order under which the NIST framework was developed. But there were a number of other activities directed. And one of the areas of the executive order that agencies were directed to look at, but they weren't able to really come up with answers, was what incentives could the government provide to industry to help it be more cyber secure. So there was about a year's worth of work, and they looked at things but did not move forward in looking at tax credits and also insurance, that type of thing. That was just an observation for me. Again, that was about 4 years ago, but you have seen governments kind of think about it. I don't think in the United States we actually move forward in that regard, but I know that they, was something that was just challenging. I think probably because of all the reasons that we've all pointed out here is how do you quantify a lot of this. So, I do know all that said that generally speaking, the United States tends to take a bit more of a hands-off approach when it comes to regulating and cybersecurity generally. So that could be different, obviously, than other countries, particularly here in this region. But that's something that they thought about.
Just a quick answer. That's a great question. My view is that SMEs are too far down the pecking order, and there are, particularly in emerging markets, there are too many other demands on regulated insurance than cybersecurity of SMEs. But one other solution could be should we shift the cost and the value to someone else. So, for example, should Amazon be insuring all of its setups, or at least subsidizing that? That's another way to think about it.
There is another option, that's government spending. And we've seen an example of that in India, in the health sector. About 20 years ago, the leading cause of indebtedness in India shifted from loans taken for daughter's marriage to medical expenses. So, while the government has not made medical insurance mandatory, the Prime Minister has introduced a new scheme, which is an insurance scheme, where the government is spending money in paying the premiums. They have attracted some criticism of why don't you beef up public health care. But that's a third solution. It's easier to do than regulation. And it's just government spending in formulating the right product and making it available initially at maybe subsidized or just the government bearing those premiums. So that is a third option.
I just wonder, one more point. Singapore just had a massive breach of health information, including our Prime Minister's health information. Singapore, country of my birth, country of my citizenship, I love it very much. Singapore has been known to be very heavy-handed when it comes to protecting stuff that is ours. Given the fact that there was a breach, it was a government breach, the breach of government data, I wouldn't be very surprised if sooner or later we're going to put in some form of state control or state protection of digital assets very, very soon. And I guess my message is to watch this space.
Are we coming back to data localization discussion? Well, we are. Okay, we have about 3 minutes. So go ahead.
Chair may not welcome this question, but I'm going to ask it anyway. We've talked about data breaches and having had my data stolen at least twice that I know about, and having two overlapping data protection identities, that's great. What happens when cyber is controlling all those autonomous vehicles and they're all going up 101 from Silicon Valley in the afternoon back to San Francisco, and somebody hacks all the Chevy Volts and there was a crash on 101, thousands of cars involved? Where does the liability go there? And or maybe more specifically, how would the insurance industry work out preemptively how you would determine where the liability would go and how to price the liability for wherever it ends up?
Anybody selling auto insurance?
No, this scenario is a talked about scenario in the connected car example. Let's say you have a connected car. It has occupants. Suddenly you have a group of pedestrians that come onto the road. The car must either swerve off the road, endangering the lives of the occupants, or it must risk knocking down the pedestrians. So, what should the car do? I said Mercedes and BMW have taken a clear position. They've said that I'm going to save the lives of my customers.
drive this.
There are other, schools of thought that say, okay, there must be an estimation of minimum damage. But it's a variant of that problem. We haven't got a cogent school of thought that underlies the principle yet. So unless we articulate that principle, liability is going to be more difficult to assess.
Yeah.
But I'll leave the audience with the last interesting scenario. You can have a complete cyber business, okay, and a business can buy its own stock. So what happens if a business buys all of its stock and there's no human shareholders left? Now who is this entity accountable to?
Okay, for the insurance panel, our discussion is getting too interesting here. Okay, thank you. We are out of time. Please.
We have one round of applause for the panelists. And